What a cool day. In fact, it's so cool. It's actually cold outside. Vinney Chopra is in California wearing a jacket inside his house because it's 50 degrees outside in California. Welcome back. This is Abundance Thursdays with myself, Gualter Amarelo, and the great Vinney Smile Chopra. Vinney, what is going on with the weather in California today?
Oh my gosh, it was 42 degrees, brother, when I got up at whatever 5:30 or so. Oh my, sipping of the coffee, the latte. But now I just saw in my iWatch and it's 50 degrees. So it's cold out there. I know my wife put it 64, I think, in the house. So, we are enjoying. And I'm a warm-hearted person and I like my body also it gets warm. But it's such great time that you and I come. Hopefully, everybody's following, liking our show, Abundance Mindset, because it's the truth. If we don't have the right mindset, lots of things don't happen in life. It's just a shift. It's a small shift, right, Walter? That everybody can make that change. Like, brother Tony Robbins says, you come here, right here, but if you just clap and you say, you know what, I'm a new person now, this moment, if I decide to be a better person, if I decide to do something better, if I decide to look at my failures and say that I'm going to not dwell in the failures, like the past. Remember this one? Oh my gosh. I have it right there in my office, This will be amazing.
Yeah,
We could
mine.
talk about it. Yeah, look at that. Look at that. This is the future. See, this is the future. This is the past. And the future goes through the present into the past. And we spend so much time worrying about the things that may go wrong in the future. But guess what? Nobody can control the future. We cannot. We could control the present, and we cannot control the past either. We cannot control the past. How many of us really spend so much time during the day thinking about the failures of yesterday or this morning or feeling guilty and everything? So I think the key thing I really love is living in the present, like, Power of Now by Eckhart Tolle, and finding the best use of time at this moment, this time. I get excited about that.
So we're just talking about emerging markets and the real estate investment space and why we're talking about those inside the mastermind. What's going on there? But before we go back into what you could do right now, there's this principle thing that we follow. These 52 principles, 52 wealth principles that me and
Mhm.
Vinny have been going over in Abundance Thursdays. Today's
Yeah.
principle is number two, which is build or choose a business that can make $1 million. And we're
Yeah.
going to look at this a little bit differently as in, investments that make $1 million. Businesses that make $1 million are uh, just as valuable, but there's also markets that can make it. There's deals
Yes.
that can make it. And we've talked about businesses in the past, but really we're moving more towards, where does the accredited investor putting their money right now? And what is important for them? I got all these notes in Vinny. So we're going to talk about how to actually decide, can a business make $1 million or not? Can an investment get you the $1 million or not? Because it's not as important to make $10,000 in a 5 year period as it is to make $1 million in a 5 year period. That's a much better return
Yes.
on investment. So, Vinny, if I were to ask you right now in this time, what do you see accredited investors struggling with? If you like are thinking about people who are not getting that $1 million return, why is it that they're not getting that $1 million return? Like, what is slowing people down?
To be very truthful, the last 4 years have been pretty turmoilous, a lot of turmoil with the after the COVID. Of course, the interest was really good. We bought only one property, I think, in 2021. But after that, we have not bought anything, right? We've been selling because what has happened with the accredited investors, lots of their cash flowing machines have stopped. The mailbox money of the cash flow stopped in the last 4 years because of the cash calls coming from the syndicators, from fund managers, and also the insurance cost went up due to some calamities and rains and tornadoes and everything. Insurance in certain sets have gone up 200%, 300%. So the cash flow that was given to the investors, accredited investors, diverted to pay the insurance to keep the lights open, things like that. Interest rates hikes also did not help at all. So the mortgages went double. It happened in my case, you know. I'm glad I sold that property in Knoxville, but it went from 33,000 a month mortgage to 72,000, brother. What? I mean, you know, how could you pay investors? So that has been something. The other thing I'm thinking and talking to a lot of wealthy investors of ours, their mindset is, how can I save money now? It's November, December. If I don't take action now, I'll have to pay extra money. Like this 1031, 8.5 million, one family brought, you know, they said, Vinny, by middle of November, I think it's going to be $2.5 million tax bill they have to pay next year, of course. But if they don't find 1031 comparable asset, it'll be difficult. So answer your question, I think that with the election year next week, we'll know who the president is. With the easing of the interest rates, it has to rebound back. We have had this high interest rate, as you know, 50 basis points. We did decrease in this month, October, but now November is coming. Let's see what Fed says. But I think 2025 overall, the consensus is it's going to be a good year in real estate.
I like that. So real estate investments have had their challenges, the past 4 years,
Yes.
and it looks like we've got a pretty good year coming ahead of us. There's another one that you and I were talking about. I think it was like 3 or 4 weeks ago. We were talking about trading bots. We were talking about
Yeah.
forex programs. We're talking about Bitcoin, not Bitcoin, but
Yeah.
cryptocurrency Ponzi schemes.
Cryptocurrencies.
There's
Yes.
been a lot of evaluating things that looked really great. And you said cash flow dried up. Some of these were paying monthly. Some of them are paying weekly. Some of them
Yeah.
paying daily with the DeFi projects. And accredited investors had access to those projects. Now, crypto, everybody had access to it, but there's certain crypto products that only accredited investors had access to, and
Yeah.
those cash flows have dried up as well. So,
Yes.
as we're going into this topic today, can I make $1 million? We also want to look at it and be a little bit more conservative than some of our friends in the business, crypto,
Yeah. Yeah.
forex, bot trading, some of those
Yeah.
ideas that seem too good to be true that turned out to be too good to be true.
Too good to be true. Oh yeah, brother. I lost maybe 45,000 here and 25,000 here. And I mean, it was making money. I mean, you know, every week they were showing me money, but then it just dried up and now you can't even get the capital. It's so ridiculous. So I think that's the big thing. Everybody, you know, it's like greed and then returns, right? You know,
Yeah,
those are the two things. And we need to be very cautious and look at, you know, do you feel good about the sponsors? Do you feel good about the people who are handling all this? And what's the model? How is it, you know, coming out? So high returns don't come to you without high risks. I mean,
that's
that's
right.
the name of the game, you know? Yeah,
That's right. And you
yeah,
were just showing me some IRR reports that you brought to the mastermind. So IRR, for
yeah,
anybody who's new to this, is internal rate of return. So Vinny
yes.
is a multifamily investor. We talk about internal rate of return, which is very different from cash on cash return, which is just,
Hmm.
hey, I put my
Hmm.
money in, I get my money back. The
Yeah.
IRR includes equity, it includes tax savings, it includes the cash flow and the amortization. So there's a lot of different components that work with that figure, and it's hard to gauge what it will
And
be
time
until
time
afterwards.
value of money too. Time value of
Time
money. You're
value.
so right. A time value, because if the project pays you quicker, you know, like in a year and give you a certain percentage, then you got your money back quicker. So IRR will be higher. But if
Right.
it's 2, 3, 4 years, you're getting cash flows and equity, and your return of capital in 5 years or 6 years, then the IRR will be a little bit lower, you know, right there. But you're so right. I think the cash flow is king. In my masterclass last night, we were looking at multifamily, we were looking at Huntsville, Birmingham, we talked about Indiana, we looked at Kentucky, we are looking at these great emerging markets where they're going to come back. I mean, you know, there are so much going on with the workforce housing, with the businesses coming. So I think it's right time for people to not be on the sideline, but talking to brokers and analyzing deals and talking to your investors, in my case, you know, because raising money is big. We should talk about that. Because if you want to make $1 million in a business, let's think about it. Where Google is, where Microsoft is, It's not because one person put money into it and they grew to be that big a corporation. No, it's all syndication at the core. Syndication is a bad word, a lot of people tell me, but it's raising or pooling money. Pooling money is another good way. It's in this syndication, but it's pooling money together for common cause with the like minded people so that the profitability can be achieved. And then, of course, some of the head honchos, become general partners who learn and analyze deals and all that kind of stuff. But the biggest thing is if we raise more money, if we get our family, friends, and people together, my thinking is that you could buy larger real estate. See, instead of getting a duplex or a fourplex, if four of the friends got together, and of course, talk to your attorney and CPA, what should be the legal structure? We are not CPAs or attorneys, but Gualter and I kind of give ideas for entertainment and educational purposes only. We want to say that again. I've been saying that a lot
This is
now
not
in my
financial advice. This is for
yeah.
entertainment. And
We have to just put a disclaimer, hopefully in every talk, because I'm doing it in my other shows also. Because we are here to really what we are doing ourselves and sharing the ideas so that it could mean something to somebody who can scale up. One of my students, I'm so proud of him. He just joined me about 2 months back. He's already got a contract on a fourplex. I was so impressed, so impressed. I said, "Holy cow, I can't believe it." I mean, there are go getters. So, anyway, the big thing is real estate will never go wrong. Real estate will never, ever go wrong. The big thing is, Galter, that if we are able to put our mind right, 25, 26, 27 could be banner years because the interest rates have to come down. Otherwise, our economy is pretty shaky. Yeah, yeah.
it's funny. I just got off the phone with a gentleman who yesterday we jumped on a call. It was one of those calls I do just to, you do the calls
Hmm.
too, right? So I'm having the
Hmm.
conversation. I asked, "Hey, what do you think stopped you from being successful?" And the first thing out of his mouth was mindset. I was like, "Hold on, what? You
Yeah.
can't hit me with
No.
right to the core of my mindset."
Yeah.
Turns out he's a
Yes.
very successful financial, like in the financial industry, very, very successful,
Yes.
followed all the financial advice.
Yeah.
But he hasn't built the passive income or the wealth and doesn't have the exposure to real estate as an investment, as a house. But the
Hmm.
conversation, as it unraveled, it wasn't his mindset. He's a very good, successful, does whatever it takes kind of person, but
Hmm.
it was his strategy was off. So technically a part of mindset because he's does all the right things, but the
Hmm.
strategy wasn't buy multifamilies and have rental units and passive income. It was work a job and put money into the 401k. And great
Yeah.
401k, but you can't retire on the 401k at 40 years.
No.
You need to get more time, right?
So exciting what you just said, and I want to actually record a lot more lectures on taxation and everything, and bring my friends CPAs into my show and do that. The other part is that the retirement plans can be self-directed also. A
Right.
lot of people, very rich people, don't know that they have $1 million in retirement fund, 401k or KEOK plan or in IRA, or how to convert it into Roth IRA where they can make lots of gains and never pay taxes ever, ever, ever again. All those good things. But it's good to really get financially sound. And the key thing is other people, I think $39.6 trillion in retirement funds in USA. So there is so much money out there. And if we are able to harness by good solid way to understand how to find a great deal, that's the key thing. You've got to have a good deal, great deal, with conservative assumptions, we call it, good underwriting, and make sure that due diligence is done correctly, and we put a business plan together. That's what I've been doing for the last 17, 18 years, so that the investor says, "Yeah, Vinny, boy, you have looked through everything and I want to jump in." So that's the way we could really make that $1 million gain in the business. Quantum leap. will come if we buy larger assets. Yes.
It's really in alignment with choose a business or choose a deal that makes $1 million. You got to go with size, right? You got to go in with bigger
Yeah.
size, and then the
Yeah.
other side is because it's you're talking about being the operator right now, but what about the
Uh-huh.
passive investor, right? So for me, I'm
Oh,
thinking if I put
yeah.
$1 million with an operator like Vinney Chopra, 5 years from now, I've got $1 million, right? Because assuming
Double.
we hit a
Probably
20%
double.
IRR, right?
Yeah.
So 20%
Yeah.
IRR means I invested my million, I got another million after five
Yeah.
years. That's
Yeah.
another business model that people don't think about. They think they've got to, just because you built it and worked hard
Yeah.
at the beginning, now you've got the capital. You can actually get somebody
Mhm.
else to go and do that work and build that next $1 million business, that next $1 million investment opportunity. And it's kind of true, right? If you get five people together to invest $5 million, right, $1 million each, now
Hmm.
you're buying a $15 million
Larger.
portfolio.
No, more than, yeah, 30% down than 70. You're right. Yeah, 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 yeah. Exactly. That's the beauty. I'm so glad you said that. You know, Walter, when people put 100,000 into a syndication or whatever property when they buy, you're controlling 400,000 because bank comes in as your partner or family office or insurance company or credit union, whatever. They say, you know what, we want to also make 7% return, 6% return as interest, which is cheap money. It's very
Right.
cheap money. But when you make from that 100,000, you bought 400,000, and that 400 set, or let's say million, if we say 1 million, you got 4 million, 4 million becomes 7 million. That gain in the next 4 or 5 years of 3 million, the bank says just pay the balance. You keep all the cream, you keep all the gains, give it to your investors, which is 70-30 split or 80-20 split. Most of the fund managers do that. So passive investors can gain a lot
Yeah.
working with some good operators. Yes,
You
yes.
just said it, the operators. It comes down to the operator, it comes down to the quality
Yeah.
of the operator because you can
Mhm.
have a great deal. Like we were just
You
talking about emerging
know,
markets. You can be in the right market. You can have a
yeah.
great deal, multifamily. And then you still need the operator. And we've talked about this a lot. The operator, the deal, the location is about 30% of the returns.
Yes.
The operator is 70% of the return. So having a strong operator, somebody who knows how to manage the assets,
Oh,
that is, they can make or break a deal, right?
you hit the nail on the head. Oh my gosh. It's when you get the keys of that apartment complex, that's when the whole thing starts. I
Yeah.
mean, changing of the electricity utilities into your name and everything, and property management company working with them day in, day out, making sure the business plans are implemented and making sure each and every month we are bringing that cash flow that we projected. So it's a huge, huge 70%, like you said, it's so important that the operators know how to operate. Of course, the lenders won't give loans, big loans, unless you have the experience and everything. And now we are working with third party Gray Stars and the other ones, the RKs, big, big, companies. But before that, we were self-managing 158 people on my team payroll. Every 2 weeks we were paying 158 people. But the key thing is you got to vet the operators. Don't be in a haste to give your money. Hey, it looks really good. Let me give it to you. No, 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 no. Do some great due diligence. Yeah.
I love that. And this is for anybody who does capital raise. I'll share this. I was on with a call yesterday with a investor who wanted to invest, and I told him no. I was like, yeah,
Yeah.
you're not ready
Yeah.
yet. You're
Yeah.
financing this. You got too many deals.
Good
You
point.
lack
Yeah.
liquidity. And if something goes
Yeah.
wrong, I really would rather not have to be the one who has to
Sure.
adjust. So investors, like if you're investing, please also don't invest your last dollar, right? Like if you're an accredited
No.
investor, invest intelligently, make sure you have liquidity. I've just seen so many investors struggle with capital calls, and now it's like
Yeah.
they're getting crunched. So we got invest in larger deals to get greater returns. We talked about that. Consider startup costs, time revenue,
Mm-hmm.
understand risk return trade-off. We talked about that. Leveraging outside
Yep.
capital. We talked about that. Focus on long-term growth. We talked about that 5 years, 7 years, 10 years. Invest in
Yes.
substantial amounts. We talked about the size of the investment.
Yep.
Bro, we're hitting
Hmm.
all the checkpoints. All right. Seek expert advice and mentorship. So, how do you know? So, let's say you've talked to an operator. How do you know this deal is going to be a good deal? How do you know, like, okay, I think on paper this is going to make me $1 million. I've invested a
Hmm.
million. 5 years from now, I should make $1 million. What is a step, or how do you go to a mentor and get that advice?
I'm so glad. I know there's so much free information and YouTube and Google and all these AI tools. It's great to get a coach, a mentor who meets with you a weekly basis. Some mentors meet once a month. That's 12 times a year. You miss so much, so much. Or there are some mentorship programs with 200 people. One of my students told me, he says, Vinny, I'm over there. I said, how do you get heard?
I
200
think I
people.
think Grant Cardone has a
Yeah.
15,000 member mentorship. It's
Oh
how are you
my
heard?
gosh.
I love Grant.
I
The
know,
word
I
mentor
know.
doesn't fit right for that
It
sort of
doesn't fit, not at all, not at all. That's why I love my mentorship inner circle, 15 people, something like that. Yours also
Yep.
more manageable because then we can hear everybody out and cater to the inner circle coaching, and everybody learns. That's the beauty. And they put holes into underwriting and ask questions and all. Then person who's brought the deal gets really satisfied. You know what? This is a good deal or it's not a good deal, and this is a good business plan, or I should be putting more emphasis in this one. Assumptions are wrong, all those things. So I remember when I bought my 14 units many, many years back, we were totally shivering. It was large amount, right? We didn't want to make a decision, but our coach helped us. So the coach said, you know what? We have looked through everything. You should put LOI and sign the contract.
Now this
And
coach,
that
Vinny,
was the,
this
huh?
coach, were they active real estate investors also? Like, did
They
they
were,
deals?
they were.
So I don't want to split hairs, but I split hairs all the
Yeah,
time with these two words. Coaches are
yeah.
people who sit on the sidelines and
Ah,
used to play the game. A mentor is
yeah.
somebody who's actively doing the deals.
Doing it.
That's why
Yeah,
mentors are more valuable. They still hold the
much
assets. They're still
more. Hmm.
in the game. And like
Yeah,
there's a lot of people who do the coaching space and they're really helpful and they're really valuable. 'Cause you need a coach when you set a goal, you need a coach to
yep.
tell you what to do. But a mentor, when you have a deal, you need somebody who knows how to close deals and is closing deals to go review things. So
They can take you to that level or
yeah,
higher because
yeah,
if they have not reached that $1 billion or something, in there, they can never push you or take you
right.
to that because you're right. Yes, yes, yes.
One more caveat, one more warning when talking to mentors, because I've got some amazing mentors. Vinny's one of my mentors, and if your mentor, if your deal is in any way like competing with your mentor, you have to be very careful because now you're putting them in an awkward situation. So
Oh,
it's
yeah.
like out of respect, like Vinny's been a wonderful mentor. I can be in something that competes with him, and he's like, "Hey, look, I'm not going to make any money on this,
Hmm.
but let me give you the advice." Not
Yeah,
everybody's like that, and some people
yeah.
will not. They'll have to tell you, "Look, I can't give you advice because that directly competes with me." So just
Mhm.
one of the rules I have is a mentor who's local and a mentor who's not local who doesn't compete with you. So it's
Yeah,
very important to have both, so you can have that kind of exposure to just honesty and like you don't want to put somebody in a bad
totally.
spot when
Yeah,
I've had people do that
for
with me, Vinny.
sure.
They're like, "Hey, you know what? I'm in your market." It's like, dude, yeah, don't ask me. I can't. Like, you're in my market. Like, but here's somebody who you
Sure.
can go talk to, just so I don't end up like in any way getting involved in it, or I don't want to know. I don't want exposure because I want to be able to give you good advice and honesty and keep the integrity of that relationship. So
Totally, totally. That's so ethical and that's so transparent and so right because I think if some student or some of our, brings the deal, then, we should never meddle with it because they brought it and help them as much as so that they are successful. So
and you
true,
and I are
so
both
true.
real estate agents, so I think that's also
Yeah.
we have to follow the rules. I'm an agent, you're an
Hmm.
agent, so we kind of like
Yep,
even
yep.
though we don't do anything with agency, it's like
No, we
we went through the
don't.
training, right? All right. So last
I
one.
don't know if I told you I'm a life insurance agent too. Vinny's
I know
got
you
time
told me you
like
were getting
crazy.
it. I know you said you did it a while back, like you went and got your life insurance.
Annuities, everything. I just learned everything. I said, all right, you know what?
So now I know who my life insurance guy is. So
No,
maybe you
no,
can
no, no.
explain infinite banking to me one day.
Actually, I don't practice either selling or buying homes, and also don't practice insurance, you know.
I get it. I feel the same way. So, do you have your mortgage broker's license? Is that the next one?
The mortgage? No, I have. Oh, mortgage. No, 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 no.
Not yet,
Actually, I
right?
have. No, I don't think I want to get in. Maybe I should. I'm just thinking. No, I think I want to really perfect the game of senior living.
I
That's
love
what
that.
I'm really spending a lot of time researching, honing my skills, teaching, and also practicing what I preach there in Arizona and everything. And
You
so
have
that,
two right now,
we
right?
can
Two residential assisted livings you
two,
just picked up.
two. We
And
got two.
have
We
you
got two.
sold all of the ASLs? Do you still have any of the senior living, senior assisted living, the
We have
85 unit
two.
buildings? You
We
still have
have
two.
two left. We have two left. Yeah, we
Man,
have
we
two
got to talk
left.
about that more often
We
because
should. We
I feel
should.
like I was like, did Vinny sell all of them? No, he still holds
Mhm.
two of the
I
large
sold
ones.
two and two more coming up, and then I just did my duplex sale, so I've got almost 300,000 sitting in the 1031 exchange. So I'll be buying the third one in Arizona.
So
So
you're going
that's
with
it.
a third
Third.
residential assisted living now.
Yes,
Right.
yes, yes.
And now,
My goal is 10. My goal is 10 in one area spread out so that we can have a good 1.2 million. You and I talked about it, right? That 10,000 per senior assisted living is usually the net cash flow or income per month. So 12 times 10 is 1.2, oh, 120,000.
it's a
10 of
million
them
dollar
will give a
business.
$1 million business. Yeah,
So
there
the
you go. We
only reason
talked about it. We
it's the
talked about
principle.
that.
The only reason you ever got into it is said, okay, this works. Now, in order to make $1 million, you need 10. Like you just did the math. And I
Yeah.
remember it was 6 months ago, 3 months ago, you started talking to me. You're like, yeah, my goal is to get 10 of these. And I was like, why 10? And you said, well, that's how I make $1 million.
Yeah.
So it's so funny. Wealth principle two is don't get into a business unless it can make $1 million. And Vinny's proven that in many different businesses. Right now, the one he's working on the most is his RALs. And if somebody
Yes.
wanted to invest with you, I know before you said nobody can invest with me. I'm not letting
Now
anybody.
they can. Now they
Now you
can.
can.
I'm ready. I'm ready. I just started. Avestor is the platform. I'll be doing some special promotions for them. I'm one of their great promoter, and it's $150 million fund for accredited investors. But the investors can invest into RAL, into hotels, into multifamily, into storage units, into all these things individually under 1 ppm. It's
Yeah,
mind blowing for
this is
me.
the holy
It's
grail of capital raising.
holy
You said you
grail.
spent like $500,000 on PPMs over the last 15, 17 years. So
Exactly,
to be able to have one
exactly.
platform where they can just go in and pick what investment they want is much easier. 'Cause, yeah, we've done it
Totally,
too, and we're like,
totally.
that doesn't make sense to have
It just
another
is
PPM, another
amazing.
PPM, another PPM, another platform. So very cool.
Yeah.
Uh,
Love to introduce you. And again, Badri and Sanjay, they're doing great job. I just interviewed Badri this week, actually. So we'll be coming out with these episodes and reels. And I would love everybody to check out avestering.com. I
I
think it's
would
the
be very
company.
open to the relationship.
Yeah,
We're doing
sure.
the income growth fund for Alchemist Nation, so that would be the perfect place to start it. Last thing we had on here is continuously reinvest in the business.
Yes,
So once you've got
yes.
and chosen a $1 million business, something that can make $1 million,
Hmm.
continuously invest. And it actually sounds like you just kind of described that with Alistair. You got a new PPM software, you got a new way to do this, and you're
Yeah.
continuously reinvesting and you're rolling your capital. Vinny, as we're jumping off, you feel pretty positive about the market, don't you? You feel pretty positive. You feel like there's money out there right now.
I do, brother. I mean, we all are, we all are. I think the savvy investors, savvy syndicators, fund managers. We've been unloading. We didn't get into trouble, because of the interest, insurance things and all that. So we feel pretty good. And then the investors also, we are trying to, get to a position now where we could scale up again, because as the interest rates come down we'll be able to see a slew of things coming up. And properties are still good 30% off right now, because some people who got into it 3, 4, 5 years back, they want to unload because their note is coming due. They cannot get the new loan, or they had hard money loans and things like that. So, yeah.
I love the focus, Vinny, and Yeah, I meant to tell you this earlier, but I've been looking at my mastermind saying from now on, I'm only taking accredited investors in the mastermind. That's the only people I
That's
want to work
it.
with. It's
That's
just
it. Oh,
if you're not
yes.
accredited, I'm just not interested. It's because there's only so much time I can spend with people.
Surely.
I want to go buy deals. So who wants to
So true.
ping? It's just easier when they're accredited. So I'm very close to
Yeah.
getting most of the mastermind to be accredited, but they're investing in deals, so they'll get there. And then
Mm-hmm.
after that, it's just accredited only. So
Nice.
lot
Wonderful.
of thanks to
Wonderful.
your inspiration of you're focused on your investors right now, building those relationships, and
Yes.
I think that each person who's listening right now really should, if you want to be successful in a time like this, because we're talking about
Hmm.
recession happening too, right? The potentiality is sitting out
Yeah. Yeah.
in a time like this, you got to hang around people who are winning, right? You got to hang around with people who found a way to win in a time where everything along the coast isn't maybe doing as good as the
No.
Rust Belt or these
Hmm.
Midwest opportunities, tertiary markets, and hang with the people who are doing it. So. This is Abundance Thursdays. We do it every Thursday. We do it at 9 a.m. Pacific Standard and 12 p.m. Eastern Time. Thank you so much, Vinny, for all the advice. I know
Oh, thank
the
you,
doctor said
Gualter.
you got to go walk 15 minutes, so go
Yes,
get your walk
yes,
on.
yeah.
Ladies and gentlemen, cheers
Thank
to
you,
your
brother.
success. When you have a choice, always work with the best. Oh, by the way, fun fact, you can go to accreditedinvestor.blog, and there
Oh,
are now
yes.
blogs that Vinny has been writing for the last couple of months. Really great
Yes.
information out there. And if you are looking for a mentor, you go to multifamilymentor.blog and just read the blogs. There's a lot of really great information that Vinny and his team have been putting
Ah,
together as education. So you heard it here.
thank
I'll
you.
drop the links in the chat. Again, cheers to your success. We have a choice. Always work with the best. We'll see you next week.
We'll see you next week.